from my view, it's way more important for people to think from a place of principles and strategy than it is to think from a place of tactics. So many people go out there and they go, okay, you know, I know what the secret is. I'm just going to buy under market value. Or I know what the secret is. I'm just going to look for renovation projects. Or I know what the secret is. I'm just going to do duplexes. But it realistically, just like any recipe, if you have a recipe that's made up of one ingredient, it's just the ingredient. But if you have a recipe made up of a variety of different, you know, components and seasoning and all of this kind of stuff, you're going to end up creating a masterpiece. So.
I just want to pick up on that point. That's a really, really good point because, you know, like I've got a lot of people that come to me and they just want to do one thing. They want to do duplexes. They want to rinse and repeat and everything like that, or they want to do, you know, just renovations and whatever. You know, it's all about strategy. You know, it's all about those end goals. So, you know, and like my portfolio is really mixed, and I've even got, you know, apartments in my portfolio. Some people would never buy apartments, but, you know, if they're in the right area and they're, you know, they're getting good cash flow and they're serving a purpose, then that might be okay as well. But it's really about, what you're trying to achieve. So certainly, you know, if you just go out and buy 10 duplexes and they're all in regional centres, that's not really going to achieve your goals either. I mean, I've got some clients that come to me, they've already got 10 or 12 properties, but they're all in regional areas. So they've all paid about 300Ks for these properties. They've got good cash flow so they can keep moving forward, but they've got limited growth. And you know, they've got these goals of retirement. And at the end of the day, it is the capital growth that creates that wealth. Because
totally.
If you've just got cash flow coming in, that's just going to, you know, pay off your debt, but you're not going to be able to retire.
You're also going to get stuck and go way slower. So to jump in there, like I like we focus on positive cash flow, but the way that we do things is like we first identify the right growth location and then seek out how we can get the right yields. Because if you do it the other way around, you're just going to end up buying some random property in some random town just because it's got a good yield number on it. And then ultimately that's not going to get you to where you want to go. Because you're right, like the growth component, that's what's going to fuel further deposits. That's what's going to build up your wealth. That's what's going to allow you to actually keep the thing moving forward. Otherwise, just in the same way that if you kind of negatively gear, it kind of works out in the long run, but it's really going to slow that whole process down. So yeah, I couldn't agree more.